everyone, welcome. This is another NFP Live as usual, as we keep providing every possible service for you. So as usual, NFP analysis, feel free to comment, to analyze with me the markets and how they will respond on the NFP release. We have plenty of time. We have nearly 20 minutes until the NFP is out. So I would like to spend mainly these 20 minutes reviewing, let's say, what might happen, and also I would like to focus a bit on the politics, because as you already know, we have actually UK elections, which actually got a little bit surprising. In general, the politics are in play this second half of the year, right? We have ahead of us the French election that the final round is on Sunday, and we have also the US elections on November, even though for now they have been a bit largely ignored. That is something that could definitely this year affect the markets. It's not something that usually the markets actually, it's not something that historically at least it has a significant impact in the market. However, this time we have once again two candidates, actually the same as last time, as in 2020, but we have the pretty inflationary Trump on the one side, and Biden, which is losing a lot of his strength lately, after especially the disastrous debate. Nonetheless, welcome everyone. I can see Malaysia, Nigeria, a lot of gold traders as usual. It might be the number one in choices indeed, along with the NASDAQ and the major indices. So welcome everyone. Feel free to ask me anything you want. So I'm gonna share, before I share basically my screen, which I will start obviously with the pound, I would like very, very, very briefly to touch a bit the UK election thing, because it's looking pretty much like a done deal, okay? By the way, guys, because I have changed my microphone, I would really, really appreciate the feedback regarding the audio. Just to make sure that you can hear me loud and clear. Nonetheless, to touch a bit the UK general elections, actually, the odds were indeed with the Labour Party, but that was how massive the voting was on the side of the Labour Party was pretty impressive. So it's looking like a done deal. It's not final, it's not over, okay, theoretically, but with the Labour market being pretty ahead of the polls, 470, if I'm not mistaken, 470. It looks to be a bit certain that we're gonna have, after 14 years, a prime minister from the Labour Party. I'm not sure whether you are all aware of him, but it's Keir Starmer. This might be the next prime minister. Previously worked also with Rahel Reeves, which works as a councillor for the Bank of England. Obviously we need to wait for the elections to officially over, but it's something that could affect the decisions from now onwards in the Bank of England, because other than the fact that they have previously worked together, they are both actually will inherit a recovery, obviously, of the economy and the falling inflation, and also, even though right now such a huge debt that there is in the UK, that looks to be a bit of a barrier. So with the elections out of the way, we're gonna focus on the Bank of England, obviously, and we should finally be able to see the Bank of England cutting rates, okay? Regardless of whether the monetary policy will remain restrictive or not. So let me share cable, obviously. Here we are. I'm gonna just very quickly, let me go through cable, and I'm gonna, of course, move to your preference, which is gold, nearly from everyone. Greetings from Cyprus, my dear friends. So, okay, I'm gonna stop talking too much. Okay, here is okay, that's here's the cable, okay? Cable, as you can see, definitely it's indeed some dollar, a lot of dollar strength as well, but it's also some impact, let's say, from the UK elections, even though they didn't really spook the market. But look at this, over here, and then the strong, decisive rebound that we have seen since the beginning of the week, something that was a bit, it didn't got into surprise. I said last week that it's consolidating, so we need to keep an eye on a breakout, and indeed the breakout came on Tuesday. Okay, this is also pretty much affected by the rallying the yields as well. So the pound has definitely strengthened over here, as you can see. But the key, okay, the key over here, this is a daily chart, guys. The key over here is the momentum. Look at that. I had, that was last week, I had drawn a trend line. Let me make sure that you can see me. Yes. I had drawn a trend line connecting, or trying to connect at least, as you can see, the peaks of my RSI, just to keep an eye on any possible breakout. And indeed the breakout came. It started actually touching a bit last week, but officially the breakout came on Monday. Okay, actually Monday or Tuesday, that was, sorry, Tuesday, it was the sign, the very first sign that pound is strengthening. So we are for 4 days in a row, 5 days in a row actually, to the upside, recovering more than 60% of the losses that we have seen in June. So it seems that the momentum remains strong, and the previous highs, is the next resistance area that we might see the pound touching. Now, for many of you that you are intraday traders and you're like trying to find out the next immediate resistance, as you can see, I have drawn this line over here, 128.16, and the reason for that, it was this double fractal that I had over here, which is the very next immediate resistance levels for the intraday traders. Okay, there are many of you over here. This is just purely technical, okay? Purely technical. I have some Heiken Ashi candles over here, guys. 4-hour chart, 1-hour chart, but let me zoom in just to see how strong these candles still are. We have some tiny tails at the bottom, but it is what it is. It's still tiny tails, indicating that bulls are still there, pushing the pound cable, the cable higher ahead of the NFP. Okay, so I would like, because there's so many of you asking about so many things ahead of the NFP. You're becoming a bit offensive, my dear famous prince. Okay, that's a bit offensive. Feel free to not watch actually the live if you don't want a woman to be presented over here. I'm really sad to see these comments. Sorry. Botswana, welcome. Another 11 minutes. Okay, yes, you're absolutely right. Let me share the calendar as well. Our economic calendar, of course. Of course. Let me just share the calendar, guys. Just to stay tuned. I will jump into the gold because the majority of you, obviously, you are gold traders, so it's good to have gold over here, okay? Gold over here ahead of the data. We have 9 minutes to go, so let me just squeeze a bit. This is the economic calendar. 9 minutes to go. Just sorry for that. And okay, so 9 minutes to go. 190,000 is what is expected today, but I will like to remind you that it's not solely the number that matters. The focus is also on the average hours, and in general, any kind of mixed signals that the report could present. Okay, so 190 is what is expected today, following that massive bid that I think we have watched together. I had this. Actually, it was my colleague Mihalis that presented for you the NFP, the previous NFP in May, with 270,000. That was a massive, massive, massive bid. So focus right now is obviously for 190. Average hourly earnings expected to soft a bit, slightly lower. Unemployment unchanged, and average hourly hours 0.3% from the 0.4%. So to finally to keep seeing, let's say, this kind of downwards pressure and downwards risk for the payrolls report, and not any further surprise from now onwards. That could bring the Fed rate cut closer. Okay, closer. It could increase the odds. I mean, if we indeed today we see a softening and downwards risk in the report, that could increase the odds of an earlier rate cut, and it could bring back the hopes for a cut in September, even though still those are pretty low. Okay, so yeah, so you understand that if we have a downwards movement today, I mean a softer labor market, this is something that theoretically could add a ceiling on the dollar, could pressure the dollar. Okay. If, however, we have another strong number, once again, this could hold dollar to the upside, which is something that we have seen since last week, and even strengthen it even more. Sorry, this is silver, so okay, I brought gold back. This is the dollar in a daily chart. Sorry, I was watching the silver earlier. So the dollar, it has been in general to the upside. This is the long-term moment, the long-term, medium-term chart, as you can see. But the new quarter. Okay, I'm gonna simplify a bit. I'm gonna remove the Heiken Action. I'm gonna bring it back later on, okay, because it's important to show you also the Ichimoku over here, okay. I wanted to analyze together the Ichimoku significance as well. So this is the overall strong trend that we have seen in the dollar for the whole year because of the fact that the rate cuts were postponed. Now, on Monday, a new quarter started, a new month started, a new week started, and we had seen, even though for the whole June we had a pretty strong dollar, we have seen the last 3 days a pullback, a strong pullback, because of the elections, because of the ahead of the NFP as well. A lot of dovish Fed bets, pick up as well ahead of NFP, and this is what it led this correction. But will this correction last after the NFP? As I said, if we see a softer and downwards and missed numbers today, if we get finally a weakening of the labor data, we might see the dollar dipping lower. If we have another strong number, then that means rebound, similar with what happened in the last NFP. Are you with me? Okay, are you with me? Okay, let's get to the gold. 3 minutes to go, so I will keep gold for you guys. I will keep gold during the NFP release, okay? What we are seeing from gold right now, that doesn't help, okay? Okay, gold, as you know, it was stubbornly pretty steady, right, for a while, mainly the whole June, but finally this new quarter, this month, we have seen some upside moves that brought the gold back to the 2367, which is it's another immediate resistance level, we can say, because it's a resistance area that hasn't been broken since actually the whole June. Okay, so I'm gonna zoom in. We have some recovery. We have seen RSI over here gaining some ground and slightly be above 50, as you can see over here. So I'm going to zoom in. So 3 days in a row to the upside, no tails at the bottom of my Heiken Ashi, strong bullish bias. Let's move on to the 1 hour chart just ahead of the NFP. And let me bring back the NFP as well. So what we had over here, a bit of a consolidation. That was the case so far today. You should be aware, guys, that the gold in general is in a weekly gain. Okay, as I said, is the bets on a rate cut from the Fed, which are picking up mainly. That's why it recovered to 2,360. I think it touched 68. Okay, and a lot of geopolitical tension as well, which keeping some kind of a safe haven underpin for the gold. So this is something that was also in play ahead, along with the anticipation of the NFP. Okay, some safe haven indeed, and with the French elections, with the UK elections. Oh my God! Let me just put the 30 minutes chart. So a big dip. Let me bring the data back. Come on. Data out, the data out, and 206, guys. That's another bid. A stubbornly strong labor market for the US. Unemployment increased though, something that could ease a bit that could bring it back some mixed pictures over here actually. Average hourly earnings in line with expectations. So the only sign that, and the yearly ones are 3.9% as expected, but lower than the previous reading. So that's, from the one hand, we have a bit, okay? We have a bit, so more jobs, but on the flip side, unemployment increased, which is something, and the fact that the average hourly earnings are in line with expectations is a good sign for the Fed, guys. So that might be the very first impression, okay? The fact that the dollar, that's gold, but why gold moved down? Because on the announcement, the dollar strengthened. But as you can see, I will put the 15-minute chart for you to see. Quickly, I'm going to zoom in as well. Quickly, the bulls are trying to bring back the gold higher. Why? Because we might have a stronger than expected number, but the breakdown, the average hourly earnings, the unemployment, even the participation rate, it's in line with expectations, indicating that we have indeed a bit of a downwards risk in the labor market. We've seen the labor market softening a bit, so that could increase after, actually, once the market comes down a bit, that could increase even more. The dovish Fed bets that we have seen so far this week. So I want to see a bit the dollar as well. As you can see, dip down. Actually, if I put the very first minute, it should jump. Yeah, it tried to jump over here and then continue down. Guys, this is what the Fed want to see. This is what the Fed want to see for sure. They want to continue seeing a bit of a softening of the labor market, and this is what exactly the today's data show. Indeed, that's what the Fed wanted to see. So yeah, guys. Okay, obviously now we have these jumps, ups and downs, a lot of volatility on the data, and the very first thing that the market participants did is trade on to jump up to push the dollar higher on this bit of the NFP number as such. However, now that they started seeing the overall picture in the rest of the report, that's a sign that the dovish bets will pick up even more, and we might see at the end of the week tonight, mainly the dollar extending further to the downside, because this is a report that indicates that the September's rate cut increased even more. The odds, expectations, the speculation for a September rate cut increase a bit. So in general, is as I said, whether or not the rate cut will take place, the very first rate cut will take place in September or not, doesn't matter. But as long as we keep seeing such data, such as the today's one, this is something that will have pressure on the dollar, because anyway, markets are ahead of themselves. The markets are ahead of themselves, so the market participants will start, and they have already started, pricing in this very next rate cut. Okay, so I'm gonna bring it back over here, yes. And I would like to focus on your questions. Okay, guys, that's the dollar. I will get back to the gold. Okay, this is gold because it's everyone's favor, I know. Okay, and I will start from the very beginning. Okay, I need to reply to this. Yes, yes, of course. Key levels of gold. Okay. I already mentioned one. I don't know whether you heard it, but it was that one, and it was already broken, that 23.67. For many, that level could be a trigger point for a long position. Some pending orders might be triggered over here. Let me just, sorry for that. So as you can see, we have a retest and a move above this immediate resistance, the 23.68 level. Let me round it up. But guys, mainly, let me just, okay. I would like you to focus a bit on your momentum, okay? Rising RSI along with, I will put the 30 minutes chart, okay, for you to see. Right now, we need to wait a bit for the markets to calm down, okay? This candle needs to close in order to see what's next. But, okay. The very next resistance area is obviously on the June's peak, which is on the 23.89 level. The bullish, strong body candles that we got so far this week and the rising RSI indicating that this area could be easily retested. Okay, here we are. It also coincides with the 61.8 Fibonacci level. So, if the asset manage to extend in the very next few hours to close mainly, this is the hourly candle, okay? If gold manage the next few hours, next few minutes to close an official at a close candle above the 23.68, which also is the 50% Fibonacci level. If you close above it, the very next few hours or minutes, depends how volatile this will get, then this opens the door for 23.89. But be a bit careful because this is a key retracement level as well. So if the gold breach this area, we might see a bit of a consolidation over here, a bit of a consolidation once it breach the 23.89. But I repeat, this area could be breached if and only if we see a decisive closure above the 23.68, which coincides with the resistance that we have the whole June, with the 50% Fibonacci level, and also with our latest high. Okay, so later on, if with the very new week and etc., we keep seeing momentum being bullish, increasingly bullish, then obviously the May's and April peak will be the very next levels that the gold could breach. Because remember that if we keep having data like the one that we had today, I mean data that indicate softer inflation, lower inflation, falling inflation, any data that signals a pressure on inflation, this is something that could increase and boost further the gold. Plus, it's a safe haven. So the elections, especially the next ones in France, could also add to this rally. So what else I wanted to mention? Yeah, so have this in mind. Let me scroll down to your comments to see what else you have asked about gold more precisely. Okay, so on the flip side, by the way, before we move out of the gold, on the flip side, 2350 is the very next support level, and for anyone actually that is, you might be scalper, you might be fast in general traders, such as a minute, 5 minute, 15 minute trader, keep an eye as the next immediate support level, the 2360, 61. I'll be, yeah, it looks just about right, 61 level. Okay, basically the bottom of this ranging market that we have seen for the last few hours. Okay, so keep an eye on that. Even though even the 30 minutes chart, there is a rising momentum, indicating that bulls are trying to push the gold higher, and it seems that there is a very big actually fight over here, as you can see. But the fact that the price is back where it started indicates that there is a lot of pressure to the upside. Gold buy, gold please, gold buy. Theoretically, you are correct, my dear friends. You are correct theoretically, but we want to see technically as well. We want a confirmation. Unless if you have some kind of a trading the news strategy, and hopefully you had put your stop loss far away in order to avoid all this jump, and you are indeed still in the market. It's all about, it's okay to trade the news, brilliant, as far as you have prepared for this huge volatility that NFP tends to present, in order to stay in the market, even after such a sharp moves such as this one. Lesotho, oh my God, hey. Had a shorter in 1 hour chart. Is it really? I'm not quite sure that I've seen something like that, my dear Folarin. No, I cannot really say that I've seen something like that, unless if you're referring to this one. 1, 2, 3. So the neckline, okay. Folarin brought over here a very significant, a nice actually, a nice comment. Indeed, we can say that there is, I mean, if I put the 1 hour challenge, zoom out a lot actually, we can see that these performance over here, sorry, no, wrong, it's the triangle. One shoulder, two shoulder, head, sorry, and the other shoulder. And the neckline, it looks to be somewhere here. We'll put it with bold. But this is something, my dear friend, that broken since the beginning of the week. You see, it has broken over here, actually broken on Wednesday here. So indeed, if you notice something like that back on Wednesday or even Thursday, why not? Was still time. Then it should be very, very good for you, Folari, because indeed that was a very bullish pattern, signaling that all this move that we have seen since Wednesday, basically a move of up to, because this was the next resistance level, a move around nearly 300 pips. Well done if you notice it on time. Well done. Well done. What an eye, actually. I didn't even, no. I don't think that had caught my eye. Well done, Folari. Well done. And thank you for bringing it up to all of us. Even though it's backdated now, but it's good. It's good. We learn with this way. So, yeah, guys, yeah. So that's broken. That's the very next resistance, and so on and so forth. If we keep seeing and move further to the upside and rising bullish momentum. So, if indeed the 23, let me just show you. 2389 breaks, then that opens the door to 2400s, 2430, even 2450. Okay, so Henry, welcome, my dear friend. Welcome. Yeah. Oh, Shiraz, I just saw it. Sorry. Yeah. If it's what the NFP means for the Fed. Remember, the last 2 years, maybe more, it was all about politics, more precisely geopolitics, okay? And central banks, because of the actions that they took in order to avoid recession, right? So they had to push the interest rate so high that they managed to increase inflation as well, which is something that is not, really high inflation is not good for the economy, okay, because it could lead to recession or even worse. So it's not the NFP as such, or the inflation as such, or the consumer confidence as such, or the gross domestic products as such, is what this data indicate for the US economy and what that means and how it could affect the Federal Reserve next action. Because market is always ahead on themselves. They are ahead of the events. They are ahead of the facts, right? Markets are pricing in ahead. So soft or lower NFP, bad NFP that you said, that indicates that they finally slow down a bit the labor market, okay? They make it a bit weaker, okay? And that will allow them, will allow them to proceed with a rate cut. Of course, we need to keep seeing the inflation as well, and we need to see a slower NFP number or lower, weaker labor market for a few months. It needs to be repeated, not to be once off. But yeah, this has increased. The data today, the fact that they presented a bit of a weakness, increased the odds that the Fed can proceed with an easing of the monetary policy, to proceed with a potential rate cut. That's why the dollar got weaker, and here we are. I'm going to put the 30 minutes chart for you to see. that's why it is expected to actually see the dollar get weaker and the gold to get higher because it's a dollar cross anyway. And don't forget that gold is used for hedging against inflation. So 66. Oops, sorry. 26 about 65 pips to save 42,000 to 4,200. Let me get back to the gold, my dear Florin. You meant 24, right? You wrote it vice versa. You wanted to say 2400s, but you wrote 4200s. I guess this is what you wanted to say. I guess. Let me just measure to see. No. Okay, I'm not quite sure, unless if you refer to an index or something, because I own you guys. I own to some of you, but we're gonna move on to the stock market as well. Okay, so Nigeria, bushlife from Tanzania. Don't say you're gonna cry, my friend. I'm thinking that you're replying to, yeah, someone higher. Yes, I cannot really tell, but right now it's quite okay. It hasn't closed. There are another 8 minutes to go until this candle closes, guys. So if I just zoom in into 15 minutes chart, for example, this is gold. You can see that it closed undecisive. So this is 15 minutes candle, 15 minutes candle in gold. So actually, I'm going to keep it. Yes, this is 15 minutes candle in gold, undecisive. That's the volatility. The very next one, which is about to close in 7 minutes from now, for the time being, it looks bullish. Okay, no tail at the bottom. Sorry, pushing higher, positive, but we need to wait for another 7 minutes to see whether indeed we have a rising gold that could confirm this breakout that I was talking to you about, the 2368 level that could eventually open the doors to the 2389 level, coinciding with the 61.8 Fibonacci level. If you're not using Heiken Ashi, that's just fine. Don't worry about it. But yeah, as soon as your strategy works for you, that's perfect. Where have I left the comments? Euro dollar, South Africa. I'm already in. Gold to 5,000. That's ambitious. That's very ambitious, Mr. Taxlepe. That you are referring to double of where we are standing so far, and actually record highs indeed. Okay, guys, I'm gonna move to the rest of the questions regarding euro dollar. Euro dollar. Botswana. Nigeria, euro, sell. Okay, I think the very next that we're gonna have covers euro dollar. Let me just Welcome, Daniel. What if the structure of the... Okay, what if the structure of the market is clearly defined, and if NFP changes direction, after NFP can still enter? Depends what kind of trader you are, Daniel, but yes, it would be wise if you don't have some kind of a trading the new strategy in place. It's wise to wait for the markets to count down a bit after the Fed, the NFP, sorry, and then decide on the market direction, because after the NFP, you see, we're waiting for these candles to close in order to indicate where it's heading next. I don't know what kind of time frame you're trading, but for example, if you are a 15 minutes trader, you have some kind of strategy and a plan in place for 15 minutes chart only. Then, after such a significant indecisive candle, we need to wait for the very next one, okay, to see whether it's presenting some kind of a strong bullish momentum or not, without any indication of a lower tail at the bottom. And also combine an indicator. Over here I have the RSI, which, as you can see, is holding above 50, and actually I'm going to put another line over here and delete this one. Just to monitor, okay. And my stochastics as well. I'd like to see my stochastics as well. That's just, yeah, stochastics as keep rising, even though they have just entered the overbought territory. There is still plenty of room to be covered. So another 2 minutes to go until this candle close. But if you're waiting for the NFP announcement to be released and then decide what you're gonna do, then wait, okay, for the candles to close of your desired time frame. Check what your chart is telling you, not what you see. Check what the chart is telling you, not what you think, what you see actually. The momentum, whether everything is in line with the bullish or bearish direction, and then take a decision. So over here, 2 minutes to go until this candle closes. But if this candle closes like with this way in 2 minutes, that could mean a breakout of June's resistance, which is the 23.69 level, which also coincides with a key Fibonacci level, the 50%. We have rising momentum from RSI, rising momentum from stochastic. This is a high Kenashi candle with no tail at the bottom, so everything points to a positive bias. So the very next resistance, okay, is the for the day is the 23.89 level and the week, but for the 15 minutes chart, you need to use some either your ATR or some kind of tools to find your very next resistance level. So the very next for such a short time frame such as this one is 23.77, or you might consider using, sorry for that, your ATR, as I mentioned. So ATR suggests for a $4 move. And indeed, that closes. Have you seen that? It closes above 23.68. So it looks that the short-term picture for gold is still bullish. I have analyzed gold. This is still gold. We spent the last 50 minutes nearly on gold. So I'm gonna Does gold, yeah, we have seen this. Mayowa, yeah, we have seen this already. Gold, 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 gold. Okay. Euro, euro dollar. Let's say euro dollar, guys. Let's move on. Let's move on. Let's move on. Here we are. Hi, euro dollar. Come on, show euro dollar. Let's move on to euro dollar after the. Okay, here we are. Sorry for that. Just a second. Yeah, over here. Okay. Over here, I haven't used Heiken Ashi candles, okay? In general, I would like to show you, I think you already know it. I mean, it's something that we are monitoring since last week as well. We're seeing some kind of a rounding bottom, sorry. This is the daily chart. And we had a nice decisive upwards move, mainly on due to the dollar weakness. So, and already, I think the euro dollar recovered more than 70%, 80%, 70% of the decline that we have seen since May. So, with a move to the upside for nearly 1, 2, 3, 4, 5, 6, 7 days in a row, obviously, this is the ceiling. The 109 is the ceiling. However, a more immediate resistance is basically another 25 pips higher, so 108.50. But what triggered my attention is this bullish cross. Let me just. This is still the daily chart, okay? The bullish cross over here between my. Basically over here I have a 10, but they're both exponential, okay? Can you see 10, 20, and 50 if I'm not mistaken? Yes. I have a bullish cross between my 10 and 20. So the more near-term moving averages. I'm gonna just this one is making it more messy. Yeah. So it's the end of the week. There should be some kind of consolidation over here, but overall we have a strong euro dollar. So I'm gonna move on to the 1 hour, actually 4 hour chart firstly, just to see together where we're standing. As you can see, a pretty aggressive rally for euro dollar already. Look at that. This is the 4 hour chart. Already extended. Actually, today in general, it has been above the 61.8 Fibonacci level. Okay, in general, today. Allow me a bit. Okay. So here we are. So why is that, and why this cross might, at least from a fundamental perspective, continue to the upside? One thing is the weak dollar, okay? The fact that the Fed will cut rates, or the Fed could cut rates earlier than what was expected. But also on the flip side is the fact that the ECB officials have effectively confirmed that the rates will be on hold this month, okay? So they're not going to change anything during July. August is pretty dead. The bankers don't really present a meeting or change anything during August. So this is what from a fundamental perspective at least, and technical perspective, as you can see over here, strengthen euro against US dollar, even though both economies should proceed with rate cuts. Okay. Yeah. Other than that, what else we're watching over here? So the fact that 108 level, which was a very, very important key psychological resistance area has already broken, okay, and the euro holds a move above it, this is something that, as I said, keeps the dollar to the upside with the very next resistance that could be retested at 108.50. Now, let's zoom in and see. Actually, I'm going to apply my short-term, my short-term template over here. Okay, so this is the 1 hour chart. I'm gonna remove the Bollinger's as well. So you can see that it's in a continued rising trend with small body candles, but still higher highs and higher lows above the first resistance of the day. But this is for intraday traders in general. But as you can see, actually in general, the last 6 hours, we are seeing a lot of consolidation. Okay, flat moving averages. So this is the 5 and 9 exponential moving averages. Momentum is nearly zero. RSI has flattened, and actually it's back below 70. Stochastic, we have a bullish cross, but it's flat. It's pointing. You cannot see that. Let me just, it's pointing to the right-hand side. So it doesn't point either to the upside or to the downside. It's just pointing on the right-hand side. The same stands for the RSI as well. What this implies? This implies consolidation. So with the asset still ranging, okay, you need to keep an eye on any breakout. A breakout could be seen once we see a decisive close above the 108.30, and to be more precise, a bit higher in the very second resistance of the day. Or if you see a flip downwards, and more precisely below this latest fractal over here, this could bring the euro dollar down to the pivot point, or even corrected to the pivot point of the day and the 108 level. Even though overall, considering that the euro is not changing anything, the euro ECB is not changing anything this month, and possibly neither in August, then euro might continue being stronger against the dollar. But yeah, charts will tell, and not me right now. Okay, so nonetheless, overall remains to the upside. But for any of you that are interested in trading gold intraday, keep an eye. This is still a ranging market, so you need to see a breakout to the upside in order to open the doors to today's highs, or even to the 108.50 level. Hopefully that was clear. So yeah, silver is also great. I'm gonna agree with you with Neoreps. I have just seen your comments. Sorry, you're so many that I cannot no longer. This was something that I was showing before. I confused. I thought I was in gold, and then I noticed that I was in silver. It's something that I was keep monitoring since February when this rally started. As you can see, even this pullback that lasted for nearly a month, even this correction is something that it looked to be just a correction on silver, and we're seeing that the silver is trying. Let me just remove this line, this red one, and I would like to show you that gonna put it in. Sorry, I'm gonna have it with a yellow one. You can see that silver has broken this this downward channel and extends further to the upside, with the Ichimoku cloud being positive as well. So there is back into the upside with actually Ichimoku and how big these Heikin Ashi candles are, indicating that it could return back to 23 level, 32 level, 3240 more precisely. Above Ichimoku cloud with the, okay, momentum is still a bit uncertain over here, a bit neutral, okay? But the fact that we are seeing a move that started since nearly the beginning of the year, but still holds to the upside. You see this trend line by connecting February's bottom, March bottom, April's bottom, June's bottom. It shows that the asset is still above the strong trend line that supports the asset. Above, it's still above Ichimoku. It has broken this late swing lower, has broken it higher. This is, the silver is still presenting a significant strength, because anyway, it's so what I would anyway, silver, it has, other than the fact that it's a dollar cross, that it's a precious metal in general, it has been, in general, it's been widely used for other, I mean, for more industrial, let's say demand. So then the next resistance 32.40. On the flip side, this immediate support at $30 is the support level for the silver. We've seen pound dollar. Let me just gold went as predicted. There's Uganda, welcome. Guys, unfortunately, there are some of you that they are focused on technicals, but there are others that focus also on the fundamentals. They might be more like medium-term traders. So I have to explain as much things as I can, okay? I cannot really stick only on the technical side of the market. That's very interesting. Combining the politics in France over the weekend and FP today, I think euro dollar should ease down next week. Yeah, everything depends on the outcome on Sunday, on whether the elections could. Sorry, I'm quite tired. Whether the second round of French elections will bring an absolute majority for the party. So let's wait and see. It's a pretty significant weekend for not only for French, but also for the Europe, because we're seeing a shift into the extremes, extreme left, So, or to the general, to the extremes, depends. So let's wait and see. Let's wait and see. Let's see whether Le Pen will gain the majority in the National Assembly. Basically, this will end, my dear friend, Macron's reform plans, and this could indeed suggest the worsening of the fiscal situation. And what that means, at least for euro, it could indeed, make it weaker against the dollar, because it will keep the French bonds, bond yields elevated, so pressure on the euro. Indeed, that's a nice comment indeed. So let's move on to NASDAQ. Pound the yen. Okay, let me pound the yen. NASDAQ. Okay, let's see NASDAQ. Stocks in general, they have been to the. Sorry, let me just hide the caption. Hide it. Perfect. That's so. Here we are. We have a NASDAQ over here. In general, the stock market have been to the upside. Mainly, actually, for a lot of reasons. Is the tech sector that boosting, especially the US. Sorry, the US indices, and in general the global stock market, but also the European and UK elections also was something that in general strengthened the stock market, the global stock market, and not the NASDAQ as such. So remain to the upside. I recorded another record high, 20,427 is where it's trading right now. As you can see, this is the 1 hour chart. A lot of consolidation, but holding to the upside. Anyway, it's the end of the week, okay? But can you see, guys, how big, how massive the momentum, the bullish momentum is? So, my dear friends, there is nowhere to go. It remains to the upside. It remains strong. So any kind of correction is just a correction, as long as the asset is not like moving, hasn't crossed the 20-day moving average. It remains in a rally. So any kind of swing lower, like this one or this one, is just a buying the dip. It could actually trigger buying the dip conditions, and this is what we keep seeing. Actually, boom up, boom up. This is what we keep seeing. The fact that MACD is way above zero, RSI keeps moving higher. Everything keep the stock market positive. So overall remains positive. Any pullback could trigger a buying the dip situation. So now let's shift in the 1 hour chart. Very, very, very stable, very sideways. It's the end of the week anyway. So okay, if someone would like to get prepared ahead of the weekend or ahead of the close tonight and etc., the only thing that you have to do is just finding the immediate support and resistance levels. Mainly the immediate ones is at the 20,344 to be more precisely. I'm using my fractals, the peak of my fractals as well. Sorry. And to the upside is the 20,474. 6.50. So use your immediate support and resistance level either for using your pending orders in order to be prepared for any breakout either to the upside or to the downside. This looks to be a block. Okay, this looks to be a block like this one and like this one. So with overall momentum rising, we might see further move to the upside, so a breakout to the upside with the next, I'm gonna use, Fibonacci extension over here just to find further resistance level if and only if it keeps moving higher. So the very next one, very immediate one, okay, other than the 20,474. Then we have the 100 Fibonacci extension, which is also the upper Bollinger Band line, 598. Actually, 26,000. Okay, it's 20,600. Sorry, I'm getting a bit tired. And the very next one will be up to 20,745. I'm going to put some lines on for you to be aware. So 2600, 2745, and 2835. Here we are. That's a 4-hour chart. So some immediate resistance levels. If the asset breaks above the breaks higher. Okay, so let's move on. So NASDAQ has been seen, Euro dollar has been seen. Okay. NASDAQ, okay. Let me check the next questions. By the way, don't forget the tech sector, right? NVIDIA is one of the leaders, okay, in the industry, and also a reason for the U.S. stock market and the U.S. indices moving further to the upside, especially NASDAQ. So NVIDIA is a key reason for further and higher performance in NASDAQ and S&P 500. The fact that NVIDIA keeps advancing, plus the dovish Fed, okay? Now, Aussie and dollar CAD. Aussie, dollar CAD. Sorry for that. Aussie. No one asked about, that's weird. No one asked about Bitcoin. Okay, here we are. After a pretty, we'll say, okay. After, it looks like a pennant. After this rise, after a pretty, like pretty, let's say, ranging market in May and partially June, we have seen a breakout to the upside outside this pennant, something that's a very, very strong. This is Aussie, guys, daily. a very, very strong bullish signal. Managed to exit this pennant to the upside. It broke it, and not only broke it, but continued for 2 days in a row further to the upside. Is well supported by the moving average. RSI keep rising. Already broken the latest fractals seen back in December and in May. So Aussie overall is in an upwards trend, my dear friend. Now let's move further lower and let's see it's been like this is the 4-hour chart for 19 candles in a row, sessions in a row, remains to the upside. Overall momentum continues to the upside. 67.70 is the very next resistance level, along with the 68.20. Yeah, that's the 1-hour chart. They have been a bit some consolidations, some pullbacks, like the last night, a bit during the Asia session this morning, but as you can see over here, if you can spot this, it's just a rising, narrow but still rising upwards channel. Okay, still a rising upwards channel, my dear friend. Dollar CAD now. Okay, so okay, dollar CAD. So let me dollar CAD has been actually, this looks to be, sorry for that, just a second, guys. Would like to okay, perfect. Okay, dollar CAD overall is consolidating nearly the whole last quarter, but it's at a very important support area. Okay, other than the 200-day moving average, is also an area that hasn't been broken since April. Okay, so there is not a clear direction over here as long as we don't see a break below the 200-day moving average, and so the 136 level. A decisive move below it, it could open the doors to the previous bottoms, April bottom, March bottom, February's bottom, and so on and so forth. Intraday now, increased indeed. This is the 1-hour chart. We have seen a boost to the upside for 4 hours, 5 hours in a row. This, my dear friend, looks limited. It looks like a short-lived rebound before another attempt to the downside. The candles are a bit weak. Momentum is still negative. RSI broken 50, but it looks a bit flat. I'm going to put the intraday template as well for you to see. Yeah, this looks to be a bit of a short-lived bounce. Stochastic already, here we are, flattened. Same stands for, let me just get rid of that one. Okay, there is some room to the upside, but limited. Overall, still bearish. So be a bit careful because it looks like it has already breached the ceiling, and we might see a pullback soon. Okay, still, you see, there is a mixed picture in a technical perspective, mainly because the moving average, the short-term moving average, I keep pointing higher. RSI it's at 72. Stochastic started slowing down, so suggests that there is no room to the upside. So yeah, here it's at a very crucial level because this might there are indicators, basically the stochastic and MACD indicate that it's soonish running out of steam. So it's very important to see whether we're going to have a confirmed candle, a candle closing above the 136.30, because at this area over here, it seems that there is a very key, important, strong barrier, and this might be a retracement level over here because, yeah, momentum is still neutral to negative, so keep an eye on that, guys. Euro, yen. Okay, so okay. Yen remains to the upside. There was a bit of a sideways movement the last 2 days because of the situation and the uncertainty. So ranging mainly, dear Luis. So keep an eye on the 174.45 level for a move to the upside, and on the 173.65 level for a move to the downside. If indeed it breaks below the support level, it could find some support at the 50 moving average in this 4-hour chart. Overall, it's a pretty overall, I mean, the overall picture remains to the upside. It's in an upward trend. Momentum is significantly strong. It's just the fact that the intraday is consolidating, so you can either decide to trade the ranging market or wait for a breakout. If you decide to trade the breakout, remember that in a ranging market, any failure to break the top line indicates a reversal, while any support at the bottom of the range implies it could signal a rebound. Okay, so intraday, guys, mixed, neutral. It's already running out of steam. It doesn't seem that we'll be able to extend higher. It looks like it's gonna, we might see a reversal. So keep an eye on any closure of this 30 minutes candle below the pivot point, because this could open the doors to the bottom of the range, which is at 173.70 level. Now, pound yen, of course, pound yen is one of my favorite ones lately. Clear trend, nice, beautiful, keeps rising, 206 today. It's at record highs, isn't it? Not yet, sorry, my bad. Broken, yeah, I've seen that earlier, yeah. Broken June's 2013, so broken 11 years highs. Keeps rising, momentum is extremely strong. This is the monthly reading. RSI keeps rising. Overall picture is really, really strong for pound yen. But don't forget that I have the possibility of an intervention from the yen, from the Bank of Japan and Journal of the Japanese government. We still see indeed consecutive bullish candles, no indication of a reversal yet. And indeed, the history has tell us that there is still room to the upside. The record highs have been up to 250 territory. There's plenty of room. So yeah, overall, it's still to the upside, strong to the upside, overall bullish picture. Now, intraday. There was a correction last night, but the whole day has been positive for pound yen. Bullish cross. Can you see this bullish cross of my moving averages over here? So further indication that it continued to the upside, even though the momentum is a bit flat, RSI is a bit flat. So, but there is still this is still a strong candle. Yeah, this is the 30 minutes chart, still strong, still strong. So yeah, there is further room to the upside apparently. Yeah, there is further room to the upside, guys. So let's find together the very next resistance area if the asset managed to break the week's highs. So what you can do is just use your Fibonacci extension. Already breached the 200%. So the very next one is 206.50. And actually, let me 206.50 and come on. $206.50 and the come on. $206.88, basically 206.90. Okay, very next resistance levels. If we see a break above the week's highs. So pound yen has been covered. Let's finish with dollar. Consolidating a bit, as you can see, but overall, but mainly lower. Yeah, it's mainly lower after the data. So if the very next support, guys, the very next floor for the pound, for the dollar, sorry, it would be the round 104 level. And actually over here, actually, and the bottom that we have seen since March over here, so 103.70. These are the very next support levels for dollar if it continues to the downside. Yeah. Did pound change anything? Continues to the upside, keeps moving higher. This is pound, stronger, stronger. It is what it is. It is what it is. Guys, if you have no, this is gold, continues to the upside, keeps rising. 23.80 has already been breached. Just 10 pips away from the 10 points away, sorry, from the 23.89 that I mentioned in the beginning of this live. So bulls are in play. So guys, if there are no further questions, I'm going to call it a day because this lasted for too long. Yeah, Bitcoin, Bitcoin. Oh my God, that was where is it? Let me just, yeah. I'm not sure how many of you follow the news about cryptos, but sorry, that's an area in which it has been ranging for nearly the whole year. So the fact, sorry, the fact that we have seen a breakout today with more than 3% decline over here is something that raises questions whether we're gonna see Bitcoin actually turning into a free fall, okay, and returning back to November and December 2023 territory. Okay, so it's a very important breakout that we need to keep an eye on, especially ahead of the new week. Momentum is negative. Everything is in line with a bearish, outlook for the for Bitcoin, and in general I'm a bit tired. And in general, the crypto industry, the crypto market. It was something that I wanted to share with you earlier. Yeah, there are a lot of analysts and economists that are calling for and raise question about a crypto crash. Because that was a very, very, very big support. Okay, that was a very big support. Where is it? Here? That was the 60K were very, very big support, and the long-term trend, it looks that it has ended anyway. I mean, this long uptrend has ended anyway. The asset is well below our moving averages. Okay, and even if I change and put the 100. You're gonna see that, okay. You're gonna see that is well below the 100-day moving average. And let me change this. Actually, let me add also the 200-day moving average as well with red. So you see, well below 50, 100-day moving average, and already breached 200. But the key is that this uptrend has ended. Okay, it has ended, and the asset is below the 60K, which was a key support for the asset. Okay, so that opens the door to the downside. It seems that there is a lot of fear that cryptos have started not their usual crash, I will say, because remember that they repeat a bit of a pattern. Rally to extreme record highs, drift. Rally, another record high, drift. Rally, another record high, and then drift. So this is raising concerns whether we're going to have a repetition of what happened in 2021, or happened in twice in 2021, or happened, let me show you. What happened back in 2000, sorry, I want to go back. What happened back in, come on, in 2013, in 2017, remember, it's a usual pattern, 2017, and so on and so forth. So is it indeed, once again, a reversal, a crash? It's raising a lot of concerns because this kind of assets tends to move violently when they are in big ranges, like the one that we have seen for nearly 2 or 3 months in a row. So that's the fact that this psychological level broken, okay, it's raising a lot of concerns whether it's the beginning of a new long-term decline. It's been to the 25% down, in June in general. Okay, so keep an eye on that as well. I'm gonna put a trend line for you to draw as well. So somewhere here, it's the most appropriate. So 1, 2, 3. I connected 3 points. And keep an eye on that. Yeah, it could open the doors, as I said, to to the last quarter of 2023 initially, and see how it goes. Guys, I'm gonna call it a date. I can see there are no further questions. Alchemy, there are some simple steps. If you have already opened an account, I don't know, by saying account, you mean a wallet and not an MT4 or MT5 account. I don't know exactly which stage you are, but our team over here, support team, is here 24/7. So ask for help in the chat that we have on the website, and they will stay with you and help you step by step, okay? So, guys, as far as I can see, there are no further questions. I'm going to call it a day. Thank you very much for being here, because I can see that still 100 people stayed until the end of the live, and I'm glad. Hopefully, it was helpful for you. If not, I really appreciate the feedback, okay? So please, please, please send me feedback, okay? Preferably, I'm gonna stick an email address over here, okay? It's the email address that I'm using for the webinars, and me and the team actually. So feel free to share with us your feedback and tell us what else you need from us, what will be helpful for you, how we could change the live stream in order to benefit you. I know that some of you people don't want us to explain the fundamentals. I'm not sure whether I could do that. But we could think of something else, a different approach, okay? So I would really, really, really appreciate the feedback. I'm open to feedback. So anything that you can suggest, bring it on. We're ready. Okay, thank you very much. Have a great day ahead. Have a great weekend ahead. Take care, because as a friend of mine over here shared earlier, the French elections might significantly affect the euro. Find your support resistance levels. Be prepared ahead of the weekend's elections and ahead of the new week. And see you again next week. Thank you very much for coming here. Hopefully you enjoyed. We're going to see you again next week. Thank you very, very much. Thank you. Bye-bye.